Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, August the 2nd. The year's 2022. Let's talk trading. Reasons to focus on money, part 2. As always, these videos are for educational purposes only. Your results may differ from mine. Okay, a reason to focus on money. Some of you out there are doing those proprietary trading challenges or the prop firms. And you notice they have usually about 4 things that as a trader you have to achieve in order to pass their test. First is they have a time limit on how long the challenge is. Usually it's about 30 days. The second thing is they have a maximum loss you can occur on the account. Usually it's 10% of the account. So if you have a $100,000 account, you can lose 10,000. If you have a 50,000 account, you can lose 5,000. That's total for the time period. So that's money. First one's time, second one's money. The next one is how much you are allowed to lose in a day. Usually that's 5%. So on a $100,000 account, you can lose up to $5,000 a day. On a $50,000, you can lose $2,500. So you've got 2 limits there. You've got a day, that's the time, and you've got an amount. So you can see so far 2 out of the 3 is an amount. Now the fourth thing is how much you need to make, how much profit you need to make in a month in order to pass the challenge. And usually that's also 10%. So 100,000 account, you need to make 10 grand, 20 on a 50,000 account, you need to make 5 grand. So 3 out of the 4 parameters have to deal with the money, not pips, not anything else. You could say you could also say it's a percent, but of the account, but the percent of the account is money. So you can see these big guys, these prop firms, what's their focus on? Money. What does that tell you? Now, a lot of people will say, focus on the method, focus on the procedure, your trading plan, etc. But the thing is, all of those things have to incorporate money because you have to manage the money. Because failure to manage the money usually is going to result in failure. So I've got this H1 chart up here just to show you. You can see we are about halfway into the hour here, 24 minutes. And you can see price had shot way up to 40, what I call the launch pad, and then retracted. So you might wonder, why didn't I go long in the launch pad? Well, the daily open is actually in the launch pad. You can see there at 22.46. So you want to see price above the daily open before you really start taking those long trades in the launch pad. Also, you can see here we put in a bottom a few hours ago and came back up. So you want to see price a certain distance away from the open before you start thinking reversal. And in this case, it was about 60 pips away from the open, which, if you remember what that represents, you see we were into a rat zone because we were 60 pips away from the open, which means we were and the high was above the open, we had enough range to start looking at rat trades down here. In fact, I know there's one trader out there that's using the rat zone, and he's taking a challenge. And so far, he's got the money part passed. He just has to put in a few more trading days. So that's the money. Now, those of you who are new to some of my methods, some of my indicators, in fact, welcome aboard to, there's a couple of new traders who are following me on the Reddit thread, the Never Lose Again thread over there on Reddit. I had to start my own thread because I got kicked off of the FOREX thread. In my trading career, I keep getting kicked off of forums. It's pretty funny, actually. I don't sweat it anymore. I just do my own thing. I just find it best just to, carve out my own little areas and do my thing there, and people find me or they don't. So, the rat trade. I figured this out from a book that had nothing to do with trading. It had to do with animals and the rats and the study about the rats and the Yale students. And it just seemed to make a lot of sense to me. And, coupled with an observation about the wick size of the pound dollar on the daily. And let's see, we can flip over to a daily chart. And you can see these wicks are usually pretty big. I mean, you can get some small wicks every now and then. But if you did a green rat, you can see here, there was a nice move. But chances are you probably didn't do a green rat because price was moving this way. And you got up here. If you did a red rat, that was nice. Here, red rats got paid off, possibly. But the green rats, most definitely. Because see here, this looks like the red rats got paid off, but chances are when it hit here, wasn't enough range to actually do a rat zone trade. You can still do it, but the statistics aren't in your favor at that time. It's when the range, I think we lowered the range to, was it 45? Let's see, rat zone. Minimum range, we lowered it to 50. Might have to rerun the stats because the pound has been ranging a little bit more. So when you look here at the buy zone, you can see there was a nice green trigger in the Asian session, which in the Asian session you can definitely trade the buy zone because price has to move away from the open. Now when you move into the London session, you can also trade the buy zone if price comes back through it. And in the New York session, the same thing. But usually in the pound, or rather in the London, New York sessions, a lot of times you look for reversals. And you can see here, we're coming through. We got a H1 open crossover just there. H1 was at 20. We're now at 24. Dropped back to 21 just that quick. That's one of the reasons why you have to take profit when you can. Now, some traders are not the intraday traders. They are more swing traders, or they might even be intraday traders, but they might be in a trade for say 4, 6, 8, 10, 12 hours, just a little bit more, where they're looking to make the bigger gains. So for example, they might be doing a holo trade, which definitely would have paid off. So they may have gotten in here. Maybe they put their stop, somewhere below the current daily low, and then they just sit back and wait. Maybe they set a TP, maybe they don't. Maybe they just pick a spot on the chart and they go, okay, we came across the 2200, so do I think price will go to 2100 or 2300? What's the likelihood? What do I quote unquote predict? And that's how possibly they trade. Or maybe they go, okay, maybe it won't run 100 to 100. Maybe it'll go to 2250 or 2150. So do I think it's going to go up or down? And then they take their chances. So I've got the dashboard here set up to show the ATR zone, or show where price is relative to the ATR zone. As you can see here, it's in between, and where it is wick zone, you see we cross below the top. And so the top would be the top of the yesterday's candle. And then we also have, is it in the rat zone? No. Holo? No. And then how many H1 bars ago did it make the daily high and the daily low? And so for some traders who like to trade more than one pair, you can use a setup like this to see where your opportunities are. And looking at the Walmart lines here, this hour, you can see we broke out of the previous H1 high, 13 pips above it. We had a long trigger at 22.30 and a short trigger at 22.20. We actually got down to 14.8, so there's an opportunity to get maybe 3 to 5 pips there. And the reason I say 3 to 5, depending on your broker, you may or may not have a spread, and depending how fast price moved off of that low, you might have been up 5 pips, but by the time you clicked to exit the trade and price bounced, you might have only picked up 3. And that's one of the things that you cannot control, is what price does after you click the button, either on entry or on exit. Usually we talk about entry more than exit, but it can happen to you on the exit too. So a lot of times when I'm looking for 2 pips, rather than get out when price stops, as soon as I see it click over to 2.1 and it's moving in my direction, I'll hit exit, and a lot of times I'll pick up a few extra points as opposed to giving them back. Now, of course, there still might be some shrimp left on the platter when I exit the trade, or they might bring out a fresh platter of shrimp and price keeps going in my direction. So a lot of times, we talk about leaving pips on the table, but the reality is you haven't quite left them on the table. So, fellow traders, that's it for today. And just remember, when you're trading, it's not what you trade, it's how you trade it. This is the Rumpled One, over and out.